We have a really great program here for you to wrap it up on the public and private blockchain opportunities for the cannabis industry. If you haven't gotten clued in by now, I'm Melissa Dardani. I am going to be your moderator for this panel, so hopefully you're not sick of seeing or hearing from me just yet. But I'm going to go ahead and introduce our wonderful lineup of speakers. You might remember Ashley from our earlier program, who is a financial lawyer, fintech expert, and COO and founder of ArteryPay, a legal, easy-to-use payment processing system with integrated cannabis banking compliance, a 2020 Bazinga list maker for both Best Payments app and Best Use of Blockchain, and one of Excellion Magazine's 100 Best Companies to Watch in 2020. Ashley's first fintech was Greenshoe Asset Management, an online hedge fund platform that connected emerging fund managers with newly accredited investors, which she co-founded and ran from 2011 to 14 as vice president of operations. Prior to her work in the fintech space, Ashley worked in legal and operations at Bessemer Venture Partners and on the financial regulatory team at Sidley Austin's New York office. Ashley has a BA from Yale in political science and classics, and a JD MBA from Northwestern Law, with a focus on the intersection of law and economics, and Kellogg School of Management with a major in finance. Steve McKeon, otherwise known as Mac, is the founder and CEO of MacGyver Tech, a custom software development company focused on usability, innovation, and fruitful client relationships. Propelled by over 25 years of experience in the tech world, Steve has combined his passion for people with his love of reverse engineering and ethical hacking to build a company capable of providing unique and fully customized software tailored perfectly to each client's needs. Steve also has a fiery passion for blockchain technology and has used skillful and creative implementation to set himself up as a leader within the emerging field. Now we also have Carolus Matoulis, a manager and chair of the Innovation Council at Wilkin Guttenplan, a small mid-sized firm in East Brunswick, New Jersey. His traditional CPA background is in the area of taxation and valuation, and his technology focus consists of digital transformations and automation, data analytics, artificial intelligence, and blockchain. The mix of unique background and knowledge that Carolus possesses allows him to bring valuable insights to a variety of problems, and I happen to know from my years working with Carolus that he is the ultimate problem solver. And last but definitely not least, NJCPA native Sean Stein-Smith, Dr. Sean Stein-Smith, who is a professor at the City University of New York Lehman College. He serves on the advisory board of the Wall Street Blockchain Alliance, where he chairs the accounting work group. Sean also sits on the advisory board of Gilded, a Techstars 2019 company, and AICPA, CPA.com startup accelerator participant, and serves as a strategic advisor to the Central Bank Digital Currency think tank. Sean is also the immediate past chairperson of NJCPA's Emerging Technologies Interest Group, where he hosts the NJCPA Tech Talk podcast, and is the president-elect of the New York State Society CPA's Manhattan Bronx chapter. He is a visiting research fellow at the American Institute for Economic Research with a book due out in Q4 of 2021. So with that, let's get started with what I think will be a very, very exciting conversation. So the way that we're going to do this is we're going to kind of start with some basics. I know what we're here to talk about is cannabis, as the topic of our day today. But with this being the Cannabis Blockchain Synergies panel, and it's funny because we started out the day in an earlier program with Ashley and Stacy talking about the craziness that one might have to have in their head to want to combine these two very new, very emerging, and what some people consider to be very risky areas. But I think as we start to go through the program today, what you'll see, and hopefully what you'll walk away with, is that because of the nature of blockchain technology and the unsuspecting transparency of it, the immutable nature of the ledger itself, in an industry as heavily regulated as cannabis, these two things fit together really like a hand in a glove. So very excited with that. I'll get off my soapbox, and I want to start with a quick polling question from the audience. Because this is, again, a very unique topic, I'd love to get an idea for the years of experience that everyone has collectively as an audience. So if you don't mind, just go ahead and take a second to answer the polling question that pops up on your screen, and then we'll get going.
So everybody should see that question up on their screen there for the audience. We leave it right here. So it should say, how many years experience do you have in the industry? You have options there, so less than 5. Let's not advance that, so it's the answers yet. Less than 5, 5 to 10, 11 to 20, and more than 20. I can see on the bottom here how many have submitted, so we have about 64% of attendees. So we'll give you guys another maybe 10, 20 seconds to get that answer in. 75%, great. So just another few seconds here. Get those answers in. 81%, we're at. Okay. All right, just 1 or 2 more. All right, so let's go on to the answers there. So we should see, there we go, on your screen, Melissa, you see those.
All right. Interesting mix. Not necessarily surprising to see a number of young associates here with us today, given the nature of this topic, but very glad to see a good mix, particularly in the more than 20 category as well, because I think no matter, disruption happens very, very quickly. And no matter if you're at the beginning of your career, the middle of your career, or the tail end of your career, these changes are going to start, they've already started to take hold. Business is being done on blockchain, and cannabis is right around the corner. We're expecting rules and regulations, as we've learned today, in the next couple of weeks. So this is here, these two industries are here, whether you like it or not. So it's great to see a good mix of people with us today. So I guess with that, let's kick it off. I'm going to throw this first question out to our CPAs. And I want to know, Sean and Carolus, what your thoughts are. Tell us why we care about blockchain and cryptocurrency in light of what's being proposed in the bipartisan infrastructure bill. So tell us why we care, in other words.
Yeah. So, Sean, if you don't mind, I'll jump right in. I don't think this is entirely unexpected. I was reading the infrastructure bill over the weekend, at least a version of it. I don't know if this is going to be kind of the final version. If folks kind of recall what was going on during the CARES Act, and then at the end of 2020 with the updated bill, there was a lot of changes being made at the 11th hour. So I expect that we're probably going to see something along those lines. The process in Washington, a lot of folks kind of describe that as making sausage, and you don't really want to see how the sausage is made there. But I think the core issues here, it's definitely a big revenue raiser for the government, which is why it's coming up now. The IRS has been trying to get folks to comply with the rules. There's a question on the 1040 that, on the front page now that asks, do you trade or do you possess any cryptocurrency? And I think from what I've seen personally, there's a lot of non-compliance. A lot of it is not necessarily malicious. A lot of it just stems from a lack of understanding of, what digital assets are and how they're taxed. I think the one thing that's kind of really coming out from the crypto folks is kind of this controversy regarding the broker definition. there seems to be an expectation that, the IRS is going to require, a lot of small, we'll call them blockchain operators, who may operate a node in their home, to have a reporting requirement. I don't think that's going to be the case. I think what the real intent is to define brokers as the crypto exchanges. The IRS will really probably focus on that, because the gateway between the digital world and the US dollar world is really the exchanges. So my expectation, and really what I saw in the bill, is there's probably going to be a 1099-B requirement for the exchanges, which is not entirely surprising. It mimics a lot of what we see with stock exchanges. I think the one that is particularly interesting to me is a requirement to report transactions in and out of the exchange. I think what this is really going to do, it's going to give the IRS a tool to anchor on, to be able to tell who the individuals are. Whenever there's an address associated with somebody in the crypto space, the IRS will be able to trace the transactions through the public blockchain, and will hopefully be able to, catch non-compliance that way. I think what's also particularly interesting is kind of the stance that we're seeing, in the world. All the countries are trying to kind of get a handle on what blockchain is, what cryptocurrency is, and how they interact with their current systems and regulations. China has taken a very hard line and is looking to ban cryptocurrency. What it looks like to me is that the United States is looking to embrace it, but as always, Uncle Sam wants his cut. You can have a business, you can make money, but you gotta pay your tax. I don't think that's entirely different from what we're seeing in the cannabis industry with 280E. Uncle Sam is very much okay with you selling cannabis, but they're looking to get their tax cut. I'm curious to hear what Sean's take on it is.
Yeah, sure. And to sort of try to sort of echo on a few of your earlier comments, probably the biggest sort of takeaway that I have is that, on the one hand, this terminology, language in this bill, it is all still pending, and I believe I saw earlier today that there have been, I believe, 285 changes put forward, right, by members of the U.S. House. So on this bill, so it is not done yet, and just knowing how things have been going recently down in Washington, this bill ultimately might not even become law until the very end of the current year. But from a impact point of view, right, on the tax, accounting, audit side of things, right, it isn't really all that much different, right? Now, I fully am aware of the fact that there has been quite a bit of pushback on this sort of definition of who has to report which information, right, based on their customer transactions to the IRS. And the main pushback that I've seen, heard about, been actually having active, pretty engaged conversations over the last 4 or 5 days on, is that the whole terminology of trying to sort of classify anybody, be it a independent minor, large, tiny, all the rest, trying to sort of have them all be classified as a crypto trading platform, isn't an accurate way to try to sort of classify these entities. But I would put forward that ultimately that language is going to end up being altered based on the pushback, from the industry. Now, in terms of the impact, right, on all of us, right, be it trying to be focused on cannabis or on blockchain crypto at large, honestly, crypto and cannabis are almost two industries that have honestly been, I'd say, growing up in parallel, right? And I would really say that really since 2015, 2016, both industries have been sort of turbocharged as an area for organizations trying to get growth, trying to grow new areas of business and operations. But as we all know, the auditing, and GAAP rules have not really kept pace. So on the one hand, it is absolutely a pivot and a trend, right? And the IRS and SEC, right, just earlier during this week, are now actively coming out and saying that, yes, it's absolutely fine to be operating on a blockchain, to be trying to raise capital on a blockchain, but you have to play by the rules, right? Be it doing your compliance work with the SEC or having to file taxes. I would say that really there is a sort of bifurcation going on right now, that there is this one group in the blockchain crypto space that's arguing that all of these efforts are a attempt to try to crush the blockchain crypto space here in the U.S. That's absolutely false, right? But the impact is that compliance, tracking, auditing are going to become more and more hot-button issues, right? That ultimately all of this focus and conversation around how to rein in, how to regulate blockchain and crypto, both by itself and how it impacts different industries, right? Be it cannabis or any other industry, is ultimately kind of like the pushback that's happening in other areas of the world, right? Because here, right now, in the U.S., we're having this pushback around crypto transactions. Are crypto equities? No. But all of that is happening the exact same time that in mainland China, right, the government over there is also cracking down on other hot areas, be it ed tech, technology, gaming, all the rest. So there is this sort of push, I would say, on a international basis to try to get a better handle on how companies operating in these areas are actually doing so. So it's absolutely a hot topic for all of us here, accounting, auditing, tax, because as we actually are, as we're talking right now, the operating rules, framework, guidelines are actually being written. So it's absolutely an area to watch, but it's also important to always keep in mind that the actual rules aren't final until they're final.
So love it, hate it, or couldn't care less about it, the CPA community is going to have to gain some level of familiarity, at least to the extent that we can answer basic questions that come in from our clients who are more likely than not 100% of the time, but they're going to be curious about this. And to that same point, we may be getting forms, 1099Bs or some other form of compliance reporting on our desks when we're doing their taxes at the end of the year. So I appreciate you guys laying that kind of foundation for us, and I'm going to actually ask us to take it another step. I want to make sure that we're all on the same page. So I'm going to direct this towards everybody. I want you to each give me, I guess, your elevator pitch, if you will, but direct it towards blockchain. And I really want to understand from each of your perspectives, what is it and how, what qualities does it have that are going to really, again, kind of lay the foundation for our discussion here today about how it can help the cannabis industry and its need for regulation and tracking and traceability and so on and so forth. So maybe Ashley, I'll go ahead and start with you, and anyone can just jump in after that.
Okay, so first we have to distinguish between blockchain and cryptocurrency. Blockchain and cryptocurrency are not the same thing. They're not the same thing. Blockchain is the underlying system that actually causes the encryption and the transfer of the data. And it is, systems architecture. So we're really talking about replacing kind of crumbling transaction infrastructure with new transaction infrastructure. This is not talking about, creating an entirely new class of assets per se. You can run anything that you want on blockchain. It's just a systems architecture. And it's actually outstanding for a number of features, particular to the cannabis industry. The transparency, and that's particular to public blockchains. The transparency allows you basically an immutable ledger to track everything that comes through that cannot be changed after the fact. It's basically incorruptible data. Now, granted, you have to have the right data going into it, otherwise, garbage in, garbage out. But when it comes down to it, blockchain is a mechanism of transferring data. It is not like the cryptocurrencies that are floating on top of it are a completely different thing. So I like it because it's immutable, I like it because it's transparent, and I like it because it creates accountability that is public.
Cool. I wouldn't mind jumping in. As an ethical hacker, the security side of what blockchain really represents is really important to me, just because I believe it allows us to start with the highest level encryption known that's out there. And these systems are unhackable. As an ethical hacker, I can't hack these, and there's no entity or government agency that could do this. It's really unique because I'm sure you guys hear all the stuff on the news about everything gets hacked. It's only a matter of when, not if. And this technology is the next, I'm calling it Web 3.0, and it allows us to have a secure internet that these are going to start moving towards other than just the blockchain and the cryptocurrencies, which is, obviously using the blockchain technologies. This is going to start making some of those problems go away. And to me, that's important because it's, you see it everywhere, and people are just so tired of and getting numb to this fact of everything's getting hacked. And I believe this is another solution on top of what the value of it does for the transparency aspect. It allows for it to be ultra secure and really easy to use in some senses once you get used to it. It is a different paradigm shift in some senses, but every new technology comes in is usually like that. So I've been embracing this for many years. We do development in it. I also do mining. So know a lot about this. And the more I learn about it, the more I like it, to be honest. So I really enjoy it, and I'm excited to be part of it.
I can jump in here next, and really sort of the angle that I try to view and try to analyze blockchain from is that it's a totally different way, right, to store and to transfer data. It can be any data, right? As was outlined, it can be artwork data, inventory data, payments data, but it's a totally new way, new platform to store and to transmit data, and to do so in a manner that is almost instantaneous, as opposed to other ways to transfer data. Because on a blockchain there is no hub, right? There is no bank, there is no payment processor, there is no third party that's in the middle of every transaction. And so in terms of being traceable, being transparent, being able to be audited, that sort of continuous flow of information, right, that on the one hand is unable to be changed after the fact, but on the other hand is approved by a consensus mechanism, really does make a trail of data. It can be any data, right? But it helps to make that trail of data that is traceable, transparent, unable to be changed, and is easy to audit, actually. So from a industry point of view, that optionality to now trace data as it happens is the biggest impact I've seen so far, as it actually links to actual blockchain being used.
Sure. I'll bring another thing to that, is also the decentralized nature of it, meaning that you can't have a single point of failure. A lot of companies in the traditional way have silos of databases and systems behind iron walls or fences, whatever you want to say there. If one of those fails, everything gets lost or data gets corrupted. The blockchain, there's every single mining node is a copy of the entire blockchain. So if all power and internet went out in the world, almost one Bitcoin miner running or any of these kind of running, that still survives. So it allows almost like a hive mentality of this data set that really allows for be really rigid and anti-fragile in a lot of ways.
So I have a little graphic here actually to actually show that fact too.
I love it.
On my coffee mug right there.
I love the cup.
Yeah. So I view blockchain as kind of the next step in the evolution of the internet. What the internet has really allowed us to do is to exchange information between peers all over the world. I think what blockchain brings to the table, it allows us to exchange value between two parties anywhere on the world instantaneously without the two parties knowing each other or trusting each other. And I think that's really the key to all of this is, the internet is great for exchanging information, but it has been somewhat limited in terms of exchanging value. So blockchain gives us that missing piece. And I guess to kind of bring this back if some of the CPAs on the call have kind of gotten lost a little bit, I view the blockchain as a triple entry accounting system. So, you make your debit, you make your credit, and all of that is copied and saved on a ledger that is available to everybody. And I think really the benefit of all of this is, we're not there yet, and I don't think we're going to be there for, quite a while. But I think there's a lot of efficiencies that can be gained in the global market and the global kind of financial systems. Because what it allows us to do is it allows us to operate on one ledger. So regardless of whatever the business is, the underlying data, the underlying kind of value can essentially be found on a single ERP system on the blockchain layer, and then companies can operate on top of it. So clearance times, kind of the financial holds, the, transferring money through wires, all of that can speed up quite significantly. And I think that's really the key for global commerce. It's going to be the efficiency gains, at the kind of global scaled companies. And I think that's where it's going to start, and then it's going to permeate to, the lower levels and kind of the, the clients that we deal with, nowadays.
So one quick follow-up to that, and I think that was excellent. Each one of you added a little bit of information to kind of build on what this definition is of blockchain and how it's different from a cryptocurrency that might be sitting on top of it. But something, and I see here in the Q&A this came through before we move on, Sean mentioned the idea that it doesn't have to be a monetary exchange that takes place for it to be on the blockchain. So can somebody provide an example of another type of information exchange that might take place and how that would translate to the blockchain and what it looks like on the blockchain? And I know that that's a heavy question, and I don't want to get too far into the weeds, but if there's maybe a good analogy out there that explains it to us as if we're five, because I think that's how you have to address these types of, when you're trying to comprehend blockchain. And I do think that these types of analogies become helpful.
I can give one. I can give one since we use it for non-value transfer. So Artery Pay uses blockchain actually for our compliance reporting and our internal systems. When it's available for transacting in the United States and it's gotten that, happy, we can go in and out of the banking system using blockchain, we'll be able to use it for that. But in this instance, because it's not readily accepted right now for transacting in value, we're actually using it to store our data. We are using it to track transactions. And actually, this is an interesting one. So in Nevada, my company has a contract with the Treasury. And what we're doing for them is we're digitizing cash and allowing them to track where that cash flows. And so when you start talking about the importance of being able to trace and comply with different regulations, it's excellent to build on a blockchain platform in order to basically have accountability. And when you integrate other forms of technology into the blockchain universe, like, for example, Internet of Things, it's very easy to track like a supply chain and make sure that people haven't tampered with your products. One example of this in the CBD market that I'm aware of, there is a manufacturer of CBD isolate that actually uses blockchain to track the movement of their product so that it doesn't end up in places it's not supposed to go. And they also have tamper-resistant seals on top of it, because one of the challenges that they had early in the CBD market was that it was being, some unscrupulous brokers were basically adding in baking soda. And so they needed to make sure that the product sealing was tamper resistant so that they couldn't do that and dilute the product in that middleman scenario such that the end products were not actually getting what they were supposed to. And so from the Internet of Things, they were able to load that data onto blockchain to make sure that the products were never tampered with. And you can start thinking about how that could be used in global trade. You start talking about customs. You start talking about tracking international imports, exports. This ends up being a really excellent use of blockchain because it allows you to integrate other intelligent softwares into the mix and have an uncorruptible chain of custody. So if you think about it as a chain of custody, that's really what blockchain is.
Yep. How about just add to that? Like Walmart has already been doing a chain link project that allows pretty much, if you're actually within the next few years, you're not on their blockchain, you won't be doing business with Walmart. So, I mean, that's kind of think about that. Large companies like that size have already embraced it and are using it just for that supply chain management, which has always been a problem.
Wonderful for logistics. Wonderful.
Yep.
Yeah, and if I could just add in just a little anecdote there. The college that I work with, Lehman, has actually been tracking courses and actual course grades for our students on a blockchain platform since 2018. So any student at the college who wants to opt into that has the optionality to now have their grades, transcripts stored and then able to be shared on that blockchain instantaneously to any other college on that network. And also to just sort of piggyback on the sort of big firm conversation, IBM has a great platform, TradeLens. So to just sort of get some more information on that type of how to track it from a supply chain point of view, IBM, Walmart, FedEx, UPS, any large firm out there has been actively using blockchain to track their goods from point A to B, since 2016, 2017. Absolutely.
To kind of bring it back. Sorry, this is going to be real quick. To bring it back to the tangible world, the one example that I like to use is in the case of real estate title. You can put the title to your home when you purchase a home on a blockchain. So when you go to sell the home or transfer title, it's as easy as just transferring the token that represents the ownership of your house to anybody. And the one issue that we kind of have nowadays is you got to go to City Hall, you got to dig through filing cabinets of papers to find the title, and then figure out if there's any liens on it. If the title is codified and on a blockchain, it's as easy as going on Google and searching the address of your home and seeing immediately who has the title and what liens are outstanding on a home. So for example, industries such as title insurance, they're going to be kind of squeezed out because ultimately they're just a middleman that's performing a service that really doesn't need to be happening anymore in the digital age.
So it kind of sounds to me like what we're talking about here, and speaking in accounting language, accountants are the way that they are for a particular reason. We like that we account for the financial transactions and ultimately the economic reality of a business on paper. Is it correct to some degree to say that by putting certain types of information like the title, or like Sean, you mentioned your students' grades on the blockchain, that you are creating almost like an accounting ledger, but for different things that aren't necessarily, again, financial transactions? Is that a fair kind of way to think about it?
I would say so, yes. 100%.
Yes.
Interesting. So we are definitely all speaking the same language here, being at a conference for CPAs. So I want to talk about, there's a couple things I want to make sure I get to here, but Steve, I have a question for you specifically, being a consultant that's helping his clients to build products that may make use of blockchain technology. My question is, and we might have already touched on some of this, is what kind of projects might you find your clients are looking to take on that involve utilizing blockchain, and how do you combat some of the skepticism, whether it's, I'm not familiar with this technology, so therefore I'm not comfortable getting on it, or I don't want to necessarily spend the time and energy and money to put this project on the blockchain?
Sure, absolutely. Great questions here. So some of the types of companies I'm already currently working with are distribution companies directly in the supply chain, manufacturers and distributors, especially import-export companies. And they're very incentivized to start having more transparency and seeing what data their competitors are doing, because it's not like I have my database and they have their database. It's one database, or almost like an Excel file in the sky where everybody has access to. And as those items get pushed along that assembly line, they can actually contribute to that data on the blockchain and move it along, and everybody has access to it. So they don't have to worry about things getting for delays or transparency where they can't see things. It just helps to be things much more efficient, as it's been already brought up as well. So we're actively working on a few projects in that space right now. Another company that I've been working with is a large Anheuser beer distributor, and I've been working with them for 8 years. I built them a really nice ERP system. But honestly, the whole thing about that is education. A lot of people really don't know what this technology means. And I've been educating a lot of the customers I'm currently working with in traditional software environments, as showing them what the benefits of these technologies can bring to their company, and also the transparency and efficiencies that will help them grow and be more competitive in the future. So is that helpful?
Yeah.
Absolutely. I also saw a couple questions in here. I was distracted because I was trying to answer one, because I can't type as fast as I can talk. Would you mind if I address one of the questions by, basically they have here, are energy consumptions concern of blockchain or cryptocurrencies? And I could answer this pretty easily. So there's two types of mining, basically validating a blockchain transaction. It's using proof of work and proof of stake. Proof of work is basically you have to prove that the work you did it, and that takes a lot of effort, and Bitcoin is the one that's most notorious for that. And the reason why it takes a lot of energy, because the calculations are getting more and more difficult, and that it's actually growing. When it was first invented over 12, 13 years ago, it was never envisioning the scale it is now. So there's probably going to be some re-engineering to make that a little bit better. But as that's still going on, there's another thing called proof of stake, which is totally flips it on its head, and Ethereum is actually moving to that as another competitor to Bitcoin, but in a much different way. And most of us would probably be using more Ethereum for building ERP systems and blockchain technologies that's going to be more applicable, not just money. And proof of stake, actually, just by actually staking and using the currency itself, you actually use that as a validation, not as actually having to do all this extra work. So that is much less in energy consumption by magnitudes compared to what a proof of work is. So I hope that is, without getting too technical, answers one of those questions.
Yeah, I think, Steve, that is about as efficiently as you can answer that question. That was the proof of stake answer, if you will. Excellent. Yeah, I don't want to get too far in the weeds. These are topics that can get very technical very quickly, and I do encourage our audience to reach out to our panelists if you run into situations where your clients are trying to navigate these issues, because we really do have a wealth of knowledge available here on the panel today. Something that came up quite a few times as we were talking about this that I know is going to be making people nervous is the fact that when we're talking about the ledger and the blockchain and storing transactions and information and how it's decentralized and publicly available, as a business owner, of course, I don't want my data out there for anyone to be able to review and look at who I'm transacting with or what kind of information I'm storing. So again, without going too far into the technical weeds, can we talk about how privacy is protected on the blockchain? and we can move to blockchain-based technology without the fear of all of our business data all of a sudden being exposed? And that question is for anybody.
Yeah, so I think this is a very good question, and it's a very important question. And this is actually, I think, the question that E&Y sought to answer 2 or 3 years ago, and they're very far down the road in terms of getting a solution for this problem. It's kind of referred to as zero knowledge proofs. So what they're essentially able to do, they're able to aggregate multiple transactions and obfuscate the appearance of them on the blockchain. So based on kind of information that they have internally, they're able to decrypt and read the transactions within this kind of rollup. But anybody who is just viewing the blockchain from the public is unable to kind of get the details of the transaction, because when you look at Fortune 500 companies, if all of their data is out in the open, it's a non-starter for them to use it. So E&Y has kind of recognized that issue and has sought to solve it, and I think they're pretty far down the road in terms of getting it ruled out. They do have a public product in beta that is available for folks to utilize and build on.
I would also just sort of add in there that it's always I think probably the first question to always ask any firm, any external client is, are you wanting to operate on a public blockchain, or are you trying to set up your own private blockchain, enterprise blockchain, right? Because on a truly public blockchain, then yes, then absolutely, then you have to use all kinds of other protocols to help keep your transactional data safe, and the IDs of those individuals, right, also safe. But on a private blockchain, enterprise blockchain, and I believe this is also a question that had come into the chat also. The bulk of firms that I work with, that I advise, help sort of build it out internally, are not on a truly public blockchain, right? They're on a enterprise blockchain, private blockchain that is organized, right, by a organizing firm or by a panel of firms. And so on that private blockchain, hybrid blockchain, enterprise blockchain, then sort of that firm or that panel of firms has the optionality to actually add members, or to add members and to then grant those members different layers of access on that blockchain depending on their actual needs. So it's critical, I think, to always be sure to understand which type of actual blockchain is being talked about.
I mean, I wouldn't mind just adding to his note about the hybrid piece. That, I think, is really the holy grail, because nobody's ever going to want to have all their stuff on there. And I see the hybrid as really being how most companies are going to want to go, either having own internal siloed databases along with a public blockchain and or another private blockchain. And even on some of these public blockchains, there's ways of actually using private keys where certain information can be publicly available, and then you unlock that other data by a private key that's given out by a member of the team that wants to control that, and can have access at multiple different levels. And there's ways of controlling the data, not just from, hey, here's an open book and everything about my business, because as a business owner myself, nobody really wants to see or have all their information out there, but having some kind of control of that. But they might want to see my purchase orders, and want to see what my inventory is going in and out, and certain things can be controlled in that aspect. And I think it's a combination of using a hybrid approach, I think, is going to be what's going to be the winner in the long term.
I think I could actually show something that would demonstrate the fact that this is not really publicly available data. Like, you have to have encryption keys to actually be able to decode it. You've got to have, so there's the public key where what you're viewing, and then there's the private keys that actually tell you who the parties are. And I don't know, can I share my screen? I can actually show what it looks like to see a transaction on blockchain, like what the public data looks like. Is that something I can do?
Dave, do we have that capability, or?
Yeah, Ashley, go up to the top and then please toolbar. There's a little computer screen.
I can't really hear you, Dave.
Arrow.
I can hear you.
Okay.
Okay, I've got something. I'm going to share something really quickly. You can see this. Oops, wrong one. Can you see this? It says Etherscan.
Yes.
Yep. Awesome.
Okay. All right. What does that say? Anybody? What are you going to do with this public data?
Yep.
Right. I mean, like, there's absolutely, and I'll stop the sharing now. This is kind of my point. You've got, here's who it's from. Super. Here's who it's to. Here's the amount in this coin that you don't know, like, what its value is. It's a smart contract, and it happened, a number of days ago. And here's how many blocks it took to confirm it. Here's how much it cost. Gas price. I don't know why they call it that, but okay, so that's kind of my point. When you take a look at that, I hope that that visual explained to people why this is actually probably better security than what they've got. It's not the publicly available data is not something that you can just randomly look at and be able to tell what's going on. You actually, in fact, need to be involved in the business to know what that's actually telling anybody, because you don't have any clue, what data in fact was transferred there. I know what it is. I know what we're tracking there, but that's just some demo. That's a demo. That's not, yeah.
No, I'm really glad you shared that.
Might help.
Absolutely. I'm very glad that you thought to share that.
That's Etherscan. That's how you track, ERC20 tokens to see like what's moved where. But that doesn't necessarily, without knowing who the parties are, you don't know what that data means.
Yeah, that's great, Ashley. Thank you so much for sharing that, because I do think it helps to dispel the myth that, oh my God, I'm on the blockchain and everyone can see everything that I'm doing. I think in reality,
really nice data encryption. Like it's a beautiful system.
Yeah. And I do want to keep it with you for a minute as we kind of pivot into the discussion about the cannabis industry. Can you step us through your product? So tell me first, very quickly what it does, and then tell me how the underlying blockchain technology is working. You just showed us an example of a transaction, but now say that I am an auditor, whether it's for the state of the state that I'm operating in, or an auditor for the IRS, or an auditor for whatever you might be audited for. Tell me how I would be able to use the data that you provide in the audit and what it kind of all means. Because what you just showed me, if you showed me that as an auditor, I would be like, okay, Ashley, cool. What is this?
Yeah, exactly. What is this? What is this? So you actually have to have the information that matches those account numbers back to who it in fact is, right? So that's kind of how that goes. But Carolus mentioned it earlier. The beautiful thing about this system is that it's your triple bookkeeping. We've got double bookkeeping, right? We've got, there's also the entries that are coming. The bank has a record. We have a record. And then there's this public record that you can reconcile everything back to. And the fact is, even though the bank can change its transaction information, and arguably we could too, not really, but like with a lot of manipulation, maybe we could. But then there's this third transaction ledger that we can't manipulate really in any way once a transaction is reported to it, and it goes directly from the transaction system. So it's not like we upload it later. This is how we're tracking the transactions to make sure that everything that is in our own records is also verifiable through, this independent system that we don't control. So it actually provides additional transparency. So back to your question about the cannabis space and how we're actually using this. So Artery Pay is a payment system. It's a digital wallet-based system that uses ACH processing. That's a automated clearinghouse. So basically, when you're in your banking, in the banking community, you've got wire transfers and you've got ACH, and now they've got Zelle, and there's some other things they're trying to do with instantaneous payments, but we'll see how far they get without using blockchain. Just kind of knowing what systems they're already trying to account for, and the fact that we don't have engineers that are even taught the coding language that our transaction systems in the U.S. banking system are on, they aren't there anymore. So you can see there has to be a switchover. And I don't know what they'll adopt. I think they will adopt blockchain because that's been basically the global consensus is like, this is kind of obvious. Why aren't we doing it? But the way that we use it is we are in the banking system. We have our ACH transactions that happen. And as soon as a transaction takes place, we load it to the blockchain to make sure that that record is accurate, to make sure that basically we're not able to go back and corrupt the record after the fact. So this is, and we use it for compliance. So in complying with FinCEN guidance with respect to the cannabis industry, you have to report every single cannabis transaction, every single purchase. And that's not normal suspicious activity reporting because this is something that's not actually suspicious behavior. So they've come up with this 3-tiered layer in the compliance side that makes it very difficult to comply with what they're asking for without, technology intervening. And so this is the way we actually have built our compliance system such that we're able to integrate the tracking and reporting that we're required to do as a financial institution on that blockchain. And then, of course, whenever the banking system is ready to actually adopt blockchain, now you've got one system that is actually operating your transactions, your compliance, the investigation part, and all of the transaction monitoring, and the reporting. And all of that is triggered off of these smart contracts. I mean, it's just awesome. It's a wonderful system to build on for a financial institution that can get rid of a lot of operational inefficiencies. And so that's how we use blockchain. The banking system hasn't adopted it. So we had to, shift our view of how we were going to use it because, frankly, this is just a no-brainer when you're talking about an industry that requires transparency. And it would be an exceptional one for them to be building their track and trace reporting software on for the government and would be much more efficient than the current systems that are being used.
And I think something that's important to highlight there, speaking through the lens of an auditor, is that we're concerned not just with checking boxes and saying, yes, we looked at this and it's there, all the paperwork is in place. It's that we need to have that lens of, is this invoice that was placed in front of us or this receipt or whatever it is, has this been modified? Is this legitimate? Can we trace this back to the source? So what you're saying is that there is no question that the record, when it comes from a blockchain-based system that's being presented, there's no question as to the veracity of that data.
That's true. And one of the things about the tracking aspects of it is that you have absolute traceability of everybody who has ever touched that asset. And that is incredibly important for verification of source of funds, for trying to shut down financial crime, and also, like you say, for the accounting purposes, to make sure that all of the funds are coming from a legitimate source and can be tracked back to the actual product sales and that those came from legitimate sources.
So from a supply chain perspective, and I'll kick this back over to anybody. When we're talking about the cannabis industry, we're talking about a product that really needs to be tracked from seed to sale. And the state of New Jersey, although the rules and regs have not come out yet, have made it clear in the legislation that there's going to be a system in place for tracking from seed to sale. And the seed to sale tracking will be accomplished in conjunction with the use of a stamp that will be affixed to the product. So again, question for anybody, maybe Carolus, we'll start with you. What does that mean? If I have a stamp and I'm gonna affix it to my product from the point that it's manufactured, where are the opportunities for blockchain there? And I think we kind of already started to allude to this when we talked about the Internet of Things, but kind of step me through that.
Yeah, so I think the way that I would approach the issue, or I guess the stamp issue, is the stamp would probably be a QR code. And, as the product is being manufactured, or, I guess it depends on, which aspect of the product we're speaking about. But you could have QR codes on essentially everything at all stages of the process. And, you would scan it, it would get posted to a ledger. And then, when the state of New Jersey comes in, a year, 2 years, 3 years later, you can essentially point to a particular batch and say, this was manufactured on this date. It's all listed here on, on the blockchain. There's a manufacturer date, there's a shipping date, there's a receipt date. This is when it was sold. Here's how much it was sold for. And ultimately, a lot of the issues that we're kind of seeing as far as 471A, the sales tax issue, this is a very easy solution for a lot of those problems. It's just a question of transitioning kind of from the financial system that we're utilizing now, because you got to pay your folks in US dollars. You got to pay your vendors in US dollars. Your clients are going to probably pay you in US dollars. If you're able to kind of convince everybody in that entire supply chain to kind of switch to a blockchain of some type, you can essentially track the product from its inception to sale, and track the value, or the transfers of value at every stage. And then, as a government agency, you can ensure that appropriate sales taxes, use taxes, and income taxes are being paid.
I think that whole angle really does highlight the whole conversation going around. Will the IRS, will the government, either at the federal level, individual states, try to outlaw blockchain or try to make it hard for firms in industries like cannabis to actually use it? The answer is no, right? Because having that transparency, traceability of every single item being transferred, every single step, does in turn make it easier to then track taxes, collect taxes as they actually happen, as opposed to doing so on a quarterly basis, semi-annual basis, annual basis, right? And so in terms of how it's going to benefit the NJ cannabis industry, having that optionality to, I believe, Ashley actually sort of outlined earlier, that having a underlying blockchain platform by itself isn't going to fix anything, right? But the true sort of value add here is to have the IoT tools that are already out there being used. On top of that underlying blockchain, now any enterprise has the option to build a ongoing, transparent, traceable supply chain all the way from the your first step to the actual final customer. So it's a real, I think, strong, let's say, value case for how to use a blockchain outside of only payments, right? Because obviously, blockchain was originally built for payments, but the true sort of value add right now, I would argue, is in this actually being able to trace any transfer on a supply chain basis. So yeah.
And maybe one thing that I want to add is the cannabis industry is really boxed out of the traditional financial systems. They're unable to bank. They have to rely on cash. So an alternative, a digital cash of sorts, is really the solution for a lot of the problems that they have. And that's really what Satoshi had envisioned in 2008.
I can I can give a little bit of the I can give a little bit more information on this. I'm a financial lawyer, and yes and no. I mean, the issue with trying to use blockchain as a value transfer and trying to use cryptocurrency as a value transfer when you start talking about the cannabis industry, that they're boxed out of the U.S. banking system doesn't mean you're allowed to use other value transfer systems to move money around. And it just really depends on how you do it, what you're talking about, and U.S. payments, you have to go to the U.S. banks for this specific industry. So the thing that makes cannabis unique is that they cannot cross federal lines. to go for their financial services elsewhere. Otherwise, they could use blockchain, they could use anything they wanted to, but and they could use international banks and things like that, but they're not able to actually make use of the international financial system. And so actually, I would kind of say that you may not, the real work that has to happen is the convincing of the U.S. banks to enter the space and the U.S. credit unions to enter the space and support payments in the space. And that's actually what we did at ArteryPay, and it took a long time. But the only legal way to provide payment services to cannabis is really through, at this time, is through using ACH provided by a bank that actually is willing to work with a payment processor using ACH for those payments in the cannabis space. And everybody knows like what kind of compliance is actually required and what they're supposed to be monitoring for in a financial crime sector. That's the one caveat that I would say for it. I don't actually think that the U.S. cannabis space is a good use case for a traditional cryptocurrency or even a stable coin, because anything that is exchange traded is going to have some kind of volatility to it. Like regardless of whether it's small, U.S. cannabis is a single currency system. So transferring in and out of other types of assets, you're always going to have some fluctuation in the value, and it's never going to add up correctly to what they're actually dealing with. So it might actually amplify some of the financial pressures that they get from things like 280E and lack of access. And also, for business reasons, again, the banking community has not been very supportive of of adopting digital assets, even if they are, entirely currency based. I can speak to that personally because we did, this is prior to Circle, we were using a stable coin, non-exchange traded. That's what the Artery thing actually is that I was showing up there on Etherscan. We were telling them, you can actually use this to do your value transfer as long as you guys account for it appropriately in the back, in the operational side. And that was just, this is not part of our core banking system, and it's going to cause too much problems for us to try to institute it. I mean, from a business perspective, it's really hard to get the U.S. banking system to shift over to systems if the really big U.S. financial banks are not doing it. So like the Chases, and we're talking about depositories, the Chase banks, the Wells Fargos, the Bank of Americas, the Cities, until they actually shift over to accepting blockchain as another transactive mechanism, it just becomes almost impossible even to use a stable coin, even non-exchange traded, to get them to work with you on that. So I'm happy to talk about that, but there's a lot of challenges to actually being able to legitimately provide financial services to the cannabis space. And sadly, crypto's not actually the answer there.
Yeah, so I do have maybe an anecdote that can kind of draw some parallels. For example, as we were transitioning from the traditional phone lines to the internet, we actually see a lot of friction, just as we're seeing a lot of friction between, cryptocurrency, blockchain, and the traditional banking system. There was a lot of friction between traditional phone services and the internet. And for example, I don't know if you guys have digital phones. Most folks do at this point, Skype, where you can call a landline. What actually ends up happening, and it's a very stupid result, is to use Skype or Teams for phones, you actually need to hire a service that connects to the traditional copper lines that used to carry phone signals. So whenever you make a call from your computer over the internet, the computer dials basically a receiver that is connected to the traditional copper lines, and then the phone call is relayed over the copper lines to the endpoint. So I think we're probably going to see a lot of this kind of parallels in the blockchain / financial world, because connecting these two systems is going to be very difficult, and it's probably going to lead to some pretty silly results at the end.
It's true. And sorry, I get just one last thing. I mean, what makes it complicated from the banking perspective also is you cannot go around the U.S. banking law or the U.S. banks. You can't go around them in this instance, again, because you can't make use of the international banking community to get your services for this. So that's, it's not, I don't want to say that it is, I don't want to say that it's the resistance from the U.S. banking community that is 100% blocking blockchain from being adopted. There are additional considerations that they have, but that is the primary driver. And actually, the law in the United States, the financial laws, don't allow you really to go around using the U.S. banking system. It's a really weird thing. I can go into a lot more detail. I don't think that we should.
Steve, were you going to say something?
I was just probably going to date myself and say I've been in technology for 25 years and remember the dial-up sounds, which probably none of the younger generation does, and how kind of like thinking back to all that kind of friction. And I've seen the dot-com bubble, and I kind of almost see like what's happening now is kind of a repeating pattern, as Corolla's kind of mentioned here. And I agree, there's going to be some really weird wirings as these older systems try to marry themselves to these newer systems. And it's going to be a little weird, and it's going to be probably actually not as efficient as we would like them to be, and, you know, as if they just went with the newer technology, which already solves a lot of these problems. So I expect to see that, to be honest. So anyways.
So I want to kind of shift gears, but not really, because we are in this arena right now, and talk about something that you touched on, but I don't know that it was fully grasped or we fully unpacked it. And that is, I guess part one is we're talking about cryptocurrency. We've spent the majority of this presentation talking about blockchain technology. And one of the very first things that we said is cryptocurrency does not equal blockchain technology. So I guess first and foremost, help us all understand the difference. When we're talking about a cryptocurrency, what are we talking about? What are we talking about in economic reality? What are we talking about for accounting purposes? And let's just kind of walk through that.
I mean, I'll start with the technical part, and basically every single cryptocurrency is built off of blockchain. Blockchain is the underlying technology. It allows it all to operate in a very efficient and transparent and encrypted way. So that's basically the distinction there. So there's all different types of cryptocurrencies, but they all really boil down to having the blockchain. So I hope that it's more of the building blocks of what these are, and there's different things to set on top of them. You know, the best way to think about it also is Bitcoin was the first one, and that's why it's the most famous and the most valuable at the time. But then Ethereum came along, which is the number 2, and really allows you to do much more. It's like, how can you control the money? And I know the smart contract term has been thrown around here a couple times. So basically, I want to kind of demystify what that is. That's really a little program or a function that lives on the blockchain, and that is almost as, you know, it basically can execute transactions and control how the data is flown, and also the cryptocurrency is flown as well. As a software development shop, that is our main thing. That what we do is actually program smart contracts or little functions on the blockchain to do things with the blockchain and cryptocurrencies. So I hope that's helpful from a technical standpoint. And I'm sure somebody on the panel can step in more from the cryptocurrency side, more from accounting purposes and what that would mean.
Yeah,
So
and so on a, oh, go ahead, Ashley.
Okay. I'll just very quickly say that cryptocurrency is a misnomer. It is not a currency. It's not. We think of currency as a value transfer, but the definition of a currency is that it's government issued, it's government controlled, and it's government backed. So cryptocurrency is not a currency. It is an asset. It's an asset that behaves a lot like other assets that are traded. Now, the difference between it and an equity, for example, or a stock, is that stock represents an ownership of a company. So you're getting a piece of ownership with that. Cryptos do not. Crypto assets do not represent that. They are an independent thing that's more akin to a commodity, where the supply and demand of the different currencies affects their value. It affects the price that people are purchasing them at. So you see a lot of fluctuations and a lot of volatility. Now, a stable coin is different than a crypto asset. I'm going to call them assets instead, because like that's a little bit broader. A stablecoin is different in that it is a fully collateralized, or it's supposed to be fully collateralized to the actual value of what has been issued. So it's still issued by a private organization, let's say like Tether. Just very quickly bring up one of the more famous stablecoin ones, and they use assets to collateralize it to maintain the value of it at supposedly $1 per one tether. Now, the fact that they're exchange traded, again, creates fluctuations in value because of the supply-demand aspects to it, but the full collateralization is meant to allow it to really be a place for you to park money when you're seeing volatility in quotation marks, fiat currencies, right? So it kind of acts as a place where you could put it sort of like gold, where it's like, oh, I'm going to invest all of my money in gold because I've decided that the government is going to hell in a handbasket. You know, that kind of argumentation. And it's an easy way for you to actually do that. There are other really great use cases for digital assets. For example, if you live in a place where you're subject to a lot of inflation because of a lack of discipline from the monetary policy perspective, it can be a great place to try to hedge basically against this currency volatility that you may even experience in your everyday life. So there's some wonderful use cases for it. They are definitely very useful. And I'm sure that Sean has a much better explanation of how they are impacted from a tax perspective.
Awesome, actually. No, and honestly, that whole crypto asset definition is a term that I always try to use also, right? Because the term crypto is a broad area, right? It's this huge area, almost I think 9,800 currencies out there right now, and there are coins and tokens backed by the dollar, by gold, by oil. There are NFTs, non-fungible tokens out there, but overall, right, from a auditing, accounting, tax point of view, in any industry, large, tiny, cannabis, otherwise, trying to do the bookkeeping entries correctly for any sort of crypto assets is a huge pain, right? Because on the one hand, there are quite a few that have some pretty large ups and downs in terms of their actual prices, and even other ones, backed by the US dollar, and actually Tether is actually quite famous because they were out there saying backed on a one-to-one basis by the US dollar, but it's not entirely true. Backed by dollar or dollar equal assets, which is a whole other issue. But the core sort of argument here is that right now there is no crypto specific accounting guidance out there, right? So any firm, right, can argue that their holdings, be it Bitcoin, other crypto assets, are inventory, intangible assets, cash equals, or anything else. Now the general consensus, which I think is absolute garbage, by the way, is that any crypto asset should be booked as a intangible asset, which is totally wrong, I think. But the core crux here is that it's awfully tough to actually have them booked correctly at the time of any transaction from a cost basis. And then how do you track any up or down in terms of the prices as you hold them on your books, right? Put it through the income statement, put it into OCI, or only put it into the footnotes if you are planning to actually hold on to them forever. And so all of that does actually create a huge headache, right, for any firm trying to correctly value, account for, book their transactions on a ongoing basis. And actually the area of trying to do crypto for our conversation here, probably the actual tax conversation is the most transparent, because the IRS has been actually quite open in any transaction involving any crypto asset, be it Bitcoin or a coin or token that is backed and equal on a one-to-one basis with the US dollar, any transaction with any crypto asset creates a tax event. And so on top of all of the other, bookkeeping, entry, IT issues, right, trying to get the transactions to be able to interoperate correctly on the back end. Now there's this whole other, tax angle that every single transaction, right? So every single transaction from a actual product point of view, a cannabis angle, has to be tracked. And every single transaction from a crypto point of view has to also be tracked, documented, and actually valued. So it's a very complicated thing to try to get crypto payments to work at a enterprise in a big way. And really, all of that really highlights why it's been mainly at the big firms right now. PayPal, MasterCard are all now allowing transactions based on crypto assets. But for the average operator out there, trying to do the bookkeeping correctly can be a big obstacle for them, but it's also a opportunity for us.
One little thing that I wanted to add, because that was really wonderful. So PayPal and Visa are primarily using the acceptance for crypto assets in the international sphere. So again, this is the U.S.
Absolutely correct.
Insisting on being difficult about everything, because we just can't let anybody else. We have to do proof of work ourselves, which is, it's not terrible. It's not terrible, but it sometimes leaves us behind. But that's a thing about crypto assets. Is that some of them can be a wonderful way to actually engage with the international sphere. So if you have a lot of tourists, like in New York, it could make great sense actually for you to accept Bitcoin as a service to your customers. I mean, that would make sense.
I would agree.
I guess just to mention one thing, I think about the tax aspect. This is something that I think a lot of folks are struggling with. Folks that are just kind of individually trading cryptocurrencies are probably completely unaware of the taxable income and the gains or losses that they could be generating. I personally try to trade as little as possible because I don't want to deal with the headache of trying to reconcile everything at the end of the year. But we do see some clients that walk in and give us their kind of Coinbase activity or Binance activity, and they've done a lot of trading, and it's an expensive proposition to reconcile and report everything correctly. And I think it's only going to get worse once the 1099-B requirements kick in. A lot of folks are, I think, blissfully unaware that of the income implications that they're currently generating.
Sure. I mean, you think about a new business owner. As CPAs, we see it all the time, how challenging it is to tell this person, hey, this big chunk of money that you made this quarter, you're going to have to take away 25, 30% of it and pay it to the tax man, because that's the way it works. Your employer's not doing it for you anymore. So I think when you think about gains earned from cryptocurrency and the wild ride that, wild roller coaster ride that these things can be, especially over the last year or so, I don't know that, people are going to be so willing to just part ways with this money that they've come into, especially if they've taken it, into your point, rather they haven't cashed it out, but rather just converted it into another currency. I just do envision there being a lot of difficult conversations surrounding that.
I have one thing to put it to the other direction, because cryptocurrency is considered property, and losses are just as important as gains sometimes too. So you can offset those gains that you've made, that 20, 30%, if you actually made other trades and you took a loss, they can offset those, and that could be just as valuable from a tax standpoint as they can be for the gains. So that's something to consider too. It's not really considered a currency, as Ashley so put it there, even though it has it in its name. They're really property, and the IRS handles it as property. It's almost like a physical property. If you actually had a house and some land, it's more considered that. So a lot of times, I see a well-known strategy I've seen is a lot of times when there's a loss out there, you could take a loss. A lot of people sell to take that loss and then buy right back, because you don't get taxed on the buyback, you get taxed on the sale. So it's a different way of thinking about it, but it could be useful from a tax strategy standpoint as a business owner or somebody who's running a company, and understanding how this is handled, not just looking for the gains, but those losses are just as important for certain different scenarios. So I hope that's useful information for all those CPAs out there.
I just saw this question come in, and I think it's an important one to cover, even though it's not necessarily cannabis related. If any transaction in the crypto space where you go from one type of cryptocurrency to another, if you buy Bitcoin in exchange, and then you exchange the Bitcoin for Ethereum or for any of the other 9,000 cryptocurrencies, each exchange is an individual capital gain or capital loss event. So if folks are doing a lot of trading on decentralized exchanges, there is a lot of taxable events being generated. If they're kind of doing yield farming or any of that sort of thing, there is a lot of kind of things to unpack there when prepping their tax return. It can be a bit of a handful.
You're not kidding.
The only transaction with crypto that is not taxable is actually buying crypto using US dollars. Any other transaction, trade, swap involving any crypto asset is absolutely going to be taxable.
Or just because you can't, just because you have the ability to go from one to the other without making that exchange back to fiat currency, as you would see with stock, it doesn't eliminate that taxable event. I think that's a great point, and I'm glad that we were able to touch on it. I want to kind of bring this back, as we're coming up on time here, to the discussion about cannabis industry and blockchain. So, I think we've covered at length the opportunities for the two industry and how they go hand in hand together. I think we've really discussed a lot of different use cases for business on the blockchain. I think we've talked about, we've tried to address some of the privacy concerns that come along with it. But something that makes me paranoid, and I think this is probably the sentiment that a lot of CPAs share, is the know your vendor process that you go through before onboarding something so instrumental into your business. Steve, you mentioned building out an ERP system for your clients. That's huge. I'm putting, if I'm your client, I'm putting my entire business in your hands, basically. So, if I was doing this with some kind of like the technology that I use in my business, every time before I onboard it, I do ask to see a SOC 2 report. When we're talking about developing something on the blockchain, and I think I did see a question come through in the chat earlier, somewhat speaking to this, we're talking about a coding language that we have no idea, no possible way of interpreting, and a technology that is truthfully very hard to grasp. So how do you guys suggest getting comfortable when talking about onboarding a blockchain-based service or product?
Yeah, I mean, maybe I'll kind of demystify a little bit. So all those smart contracts we were talking about, what Ashley was mentioning too, they're publicly available, just like all the transactions. You can go to every smart contract and look at line by line. It's actually available for everybody to see. There's companies that do validations just like a SOC 2 for those things, looking for miscellaneous things that could cause a hack to happen, or malicious things in there that looking to make somebody money. There are companies that audit. It's still kind of a newer thing, not as mature as the SOC 2, but that is coming, and there's a lot of companies that are already doing those, and I've already been asked myself to audit smart contracts to look for things. So that's the first thing we would look at, is basically what is the smart contract running on, what is it doing, how is it operating, and a lot of them are very simple. They're really just transferring money back and forth and not really complicated. Anybody that has understanding of logic can look at them. You might not understand all the syntax, but it's right there for everybody to see. So that's where we would start. And then from there, we build the other traditional software environments on top of that. They might talk to a traditional database, maybe like QuickBooks or something like that, or basically an AR, basically an old accounting system. But they will kind of roll up, but that's still going to use traditional software alongside. In my world, really, blockchain is just another database that I would be talking to and building the system off of, along with the code that sits on top of it and what the user sees. So, it's a different way, but I also like the aspects that are extremely secure. I trust any data going into the blockchain more than I would in a traditional database. There's been times in my career where there's been corrupted data, and that database was the holy grail of all that data. And there's millions, if not billions, of records in there. One corrupted record can mess up everything. Or in the blockchain, since it's immutable and it's distributed, those corruption things go away. So I actually have a higher level of confidence in these systems than I do in traditional aspects, even though some of the SOC 2 and traditional kind of validations aren't there yet, but they're coming. So I hope that's helpful to kind of demystify that a little bit.
Absolutely.
Gonna jump in for just a second here as like a support to this a little bit. We have seen some pretty substantial systems hacks in the cannabis industry. MJ Freeway had one. There was another medical cannabis point of sale system. And I can't remember exactly what it was, but there's been multiple like major hacks to like the large technology providers. And part of that is actually because prior they weren't doing SOC 2 certifications. And it's like, guys, you're supposed to be HIPAA compliant. What are you doing? What are you doing? And they just don't, they haven't been doing it. So actually, I might even trust the blockchain providers better, the blockchain systems better than I would the traditional ERP systems and the other systems that are being used right now, because like actually, there's a pretty substantial proportion of the cannabis industry that is on the tech side that is not doing SOC 2 audits or penetration testing.
And one thing, because we do security penetration testing, the biggest weakest link is not the technology, it's the people. Most of the times, 9 times out of 10, they're social engineering. You're looking for a weak link in a company. They get their credentials and they work their way up through the company. That's 9 times out of 10 how it happens. It's more of like somebody that doesn't understand technology enough and taking advantage of them, more so than the technology in place. Blockchain, that can't happen. So to me, I like that even more, because a lot of this hacking stuff will go away. It's so prevalent right now. It's overwhelming, actually.
Yeah, and speaking from a financial crime perspective, one of the most common scams that you see is business email compromise, which is basically exactly what Steve just described. It's exactly what Mac just described, is this business email compromise where somebody gets a hold of somebody's credentials by tricking them into providing them in like an email that was like takes them to a link that looks a lot like the entry point, and then they just steal their credentials and they go in and they change information on the inside. It was only supposed to be accessible through there. And like he says, you can work your way up the company and do all kinds of things and just end up siphoning off funds from a lot of these businesses just through that. But what we're talking about is a little bit different there. But yeah, business email compromise is actually probably the most common form of hack and the most common form of fraud too.
Yep, 100%.
People are definitely the ultimate vulnerability point in any business. So like anything else, training, knowledge, education, the most important thing. So running up on time, I want to give everybody the opportunity to kind of leave us with some final thoughts, whether it's, as they did on our earlier operations panel, looking into your crystal ball. It could be blockchain specific or blockchain cannabis partnership potential. What do you want to leave us with? I think this was very, very informative. So let me just give everybody here a minute for final thoughts. And Ashley, we can start with you. You're still on the screen here.
Okay. I love blockchain. I am not a technologist. I have never done Bitcoin mining, but I love the aspects of blockchain for financial infrastructure, and actually for anything that you're trying to avoid manipulation or provide additional accountability and transparency for. I think it's exceptional for government systems. I think it would help a lot in the infrastructure there. I think it's great for supply chain tracking. I think it's incredible. I think there are great things that you can do with it. Now, being on blockchain to me does not mean that you're an unregulated financial entity. So be aware, if you're using it for financial purposes, that you still need to follow whatever the applicable law is for what you're trying to do with that. So for example, as a payment processor, I have to get money transmitter licenses. Kind of obvious to me that even if I'm doing that transaction via blockchain, that does not negate my obligations to actually follow good financial law. And when you do that, you can end up with a really powerful system that actually helps with security, it helps with transparency, and it helps with accountability. As a financial lawyer, I love it. And it's scalable. This is, it's kind of an infinitely scalable system because of the nodes, because of the distributed nature of it. It's something that actually could provide like a giant web of internet, like all over the place. You see some really cool depictions of what could be possible from these networks. So I bet long on blockchain. I bet long on blockchain to replace a lot of our infrastructural requirements just in general as a society. So I think that's where I'll leave it. And from a cannabis perspective, I think it's exceptional. We use it because, again, it was just obvious that we needed to build on that because we are building for the future of finance, not just, but it's also got wonderful qualities that are helpful for the cannabis industry. But I will leave it at that. And thank you so much.
Thanks, Ashley. Mac, you want to go next?
Sure, absolutely. It's been an absolute pleasure to be here tonight. And, just somebody, I've been actually in the blockchain space for at least 5 years. I've been running a mining company in that time. And I'm actually proud to be facilitating the blockchain, not just kind of doing it for a money aspect. I love the transparency aspect of it. I believe this is the future. It is one of the first technologies that came across that's unhackable. And there's just so many properties about this. To me, it's a no-brainer, as Ashley put it. I mean, this is absolutely the future. There's a lot of people that are going to say it's not and kind of have opinions about it, but I'm a math and science person. This is built off of facts and fundamentals that are hard to argue with. And I believe this is really amazing technology. It's a gift to humankind. And just give you an example, as when I started my mining kind of ventures, down 2016, going back a little bit, when I start first buying these equipment, and the best manufacturers of this equipment is over in China, unfortunately, in Hong Kong, one of the largest companies is Bitmain. So when I started purchasing this equipment, it took 3 months for international wire transfers to clear. So that same vendor also took cryptocurrencies. Within 15 minutes, I settled any amount of transactions, and that sped up the process, made it much more efficient. And I was like, wow, this is a really good use case for an international level and avoiding things like SWIFT that are really slow and cumbersome. And, there's like 30 some hands that touch that money before it finally gets to its final destination. And there's absolutely no guarantee that that finally gets there. Like, my bank was saying, hey, I hope you know what you're doing. You're saying all this money over to China. Once it leaves America, there's nothing we can do. But blockchain, I can click on that transaction, as Ashley showed you, and see when they got paid. And absolutely know that went there without flaw and without error. So that was what sold me many years ago. And now all these years later, I'm still facilitating. I love what it is. I'm a technology person. And I'm trying to build applications built off this new technology from that fairness and transparency. And I'm also on the board for diversity and blockchain. And I care about how this technology can help make us a much more diverse society and as human beings, because I think it's really lacking. And it's really somewhat, there's a lot of, a lot at the top and a lot at the bottom, but in between, there's really not much of that. So I think that's going to level the playing fields for many companies, like the large telecom companies, or even the large companies like Google and Facebook that are just trying to make money off their users. There's decentralized platforms now that are going to rival those, and those companies do not want these technologies to come in because they're going to take away what they've been able to make money on. And I like that kind of stuff, honestly. I think it's going to put more power into the people as opposed to having where certain centralized people are just taking advantage of people or situations or money in particular. So that being said, it's been a pleasure, and I really enjoyed this webinar. It's been great.
Thank you, Steve. It's been great to have you. Sean?
Yeah, sure thing. So So I've been sort of hands-on involved in the blockchain crypto space probably since about 2015, 2016, and it really has been awesome to honestly see how much it's evolved and come, right? You know, I can recall back in 2016, 2017, going to conferences, going to companies talking about blockchain and crypto. No one had ever heard of it. And so now all of us are now talking about blockchain and crypto beyond Bitcoin, right? Trying to really now analyze how it can be used for payments, but also on an operational basis at all kinds of companies, cannabis, non-cannabis, from a audit, tax point of view. And honestly, I mean, I'm so optimistic in terms of the future applications, future benefits about reducing income inequality, economic inequality, and to honestly open up opportunities, right, for anybody here in the U.S., overseas, as to how to sort of find new applications and new use cases for blockchain, for crypto. Because honestly, you know, it's been around, right, since the end of 2008, but it's still so early in this ecosystem, right? And there are so many smart people who are doing, you know, incredible things on these platforms, trying to find ways to use it and to always try to make it better. So I am super optimistic. I really enjoyed our panel here today, really trying to analyze now beyond Bitcoin, right? Beyond talking about ups and downs in prices, but to really try to find applications and business applications, enterprise applications, and I've really enjoyed our panel conversation. And I am super optimistic going forward.
Thank you. And last but definitely not least, Carolus, final thoughts?
Yeah, so I think the accounting profession is ultimately going to be integral in kind of getting blockchain to the masses. It very much resembles something we're very used to already. And I think ultimately, I think what's going to happen is efficiency is going to win. Being able to connect the entire world and transmit value directly is ultimately more efficient than utilizing all of the middlemen that we use for various things. You know, things like Airbnb, Lyft, Uber. They're a step in terms of cutting out traditional service offerings. But blockchain can take that even a step further, where you don't have to essentially pay Lyft and then Lyft will pay the driver. What you're able to do is you're able to pay the driver directly. So when you kind of think about that service and then the money that you pay for that service, you would like all of the value that you're paying for that service being performed to go to the individual that's taking you to your destination. And blockchain enables that. And ultimately, I think efficiency is the answer. And I think we're still a long way to go. There's still kind of improvements to be made in terms of the number of transactions that a lot of these platforms can support. But I think that's really where we're going. But it will take a while, and accountants are going to be on the front line. We'll be kind of seeing it develop.
We always are, right? Sean, Carolus, Steve, Mac, and Ashley, thank you guys so much for being here. We really are appreciative of your expertise and your time and your energy into preparing for today. I think with that concludes our final panel of the day.